Hey, what's going on, everybody? It is Jason, and I am here for the next GIG. Let's see. And in five, four, three, two. Hey, what's going on, everybody? Jason Williams here, the founder of GIG, and I just want to take a quick moment to thank each and every one of you for following us here on the YouTube page, making sure to keep up with us, communicating with us, and being a part of the Global Investment Group's family. So today's video, all right, this is going to be something new we're going to start doing. Myself personally, for our entire community, is just talking about business. So I was actually working with a small group of private clients, and I was getting asked questions about stocks. I was getting asked questions about different stuff. Now, mind you, before I go further in the video, I'm not your broker. I'm not a certified CPA, right? I can't give you legal financial advice, right? I can only tell you what I'm personally doing, why I do it the way I do it, and some of the resources that we have that I can use to help you see some of the same results that I see, right? So I said, you know what, guys, I think it would be beneficial instead of doing like these private group calls, right? For me, just in the morning before I start my day, each week to do a video on Monday. And we're going to call it the Monday Breakout for GIG. And essentially, it's kind of help you guys get like a setting or a footing in what's going on in the market, what's happening, kind of giving you some of the 411 that I'm kind of listening to and finding, let you all do your own research, but really just to kind of help get everybody's mind right for the week. Because what I found in my success and failures is a lot of the times that I have failures, massive setbacks, delays, things of that nature, it comes to doing with my mindset. So we want to go ahead and do these Monday breakouts. It's going to be about mindset. It's going to be about finances. It's going to be about stocks. It's going to be about a whole bunch of different things. All right. At the end of the day, let me adjust my camera. My camera moved or something weird happened there. Sorry. So, let me lock it. Maybe that's what it is. All right. So that's what we want to go ahead and do and kind of cover in today's video. So let's dive into it and kind of talk about what today's video is really focused on, because I think I want to start the first video off with that we do is everybody understanding the mindset of finances, understanding the mindset of what it takes to make it to where you're trying to get to, because finances are like stairs, right? You're constantly climbing, and depending on where you want to be, right, there's really no stop to that, right? You could be a poor millionaire, you can be a rich millionaire, you could be a poor, thousandaire and a rich thousandaire, right? Because finances are weird. They have their own language, and until you get into a certain space in life financially, security wise, debt wise, and understanding how to leverage asset and growth, you really don't really understand it, because it comes with the skin in the game, if you will, and it comes with failing essentially, and having major setbacks and having what I would like to call epiphany moments. But you can only get those by going through series of, I hate to say it, but traumas. Right? Everything we do in life kind of dictates what our paradigm is, and what we believe our next step to be. So let's talk about getting our mind right, because without this video, I don't think a lot of people are really going to be set to succeed in anything that they do, whether it's with me or anybody else, right? Because this is information I'm going to put out there is general information. It's GP. Okay. It's not like it only works if you do it with me. It's GP. All right. It should work with anybody. So let's start off on the mind. The mind is a terrible thing to waste, but we as humans do quite a bit. So I want to say, what is your risk? What is what is your payment, if you will? Um, what is it that you're willing to sacrifice to get to where you got to get to? All right. Now, mind you, life has a series of buses, right, or vehicles that get you from A to B to C to D, E, F, G, all the way to Z, or whatever language that you're in the world, right? So, if that's the case, right, life gives us opportunities. Not all of the opportunities do we take. And part of the reasons we don't take those opportunities is I'm just kind of looking around me, right? I'm going to use this bottle. It's got a little bit of liquid in it, right? And this liquid is where I am right now in life, right? I got a big bottle to fill. I got a little bit in here, but what determines my level of success is I might eventually have more liquid than this bottle can hold. Am I willing to let whatever is in this to go to this, something bigger? Or if I have a big vehicle that I may be in an opportunity, but I might not be able to actually fill this cup, am I willing to let this cup go and get rid of some of my baggage to get into this vehicle, which is smaller, but more efficient? I hope you really understand that and hear what I'm saying because life is full of vehicles and not all of them are going to get us from A to C. We may have to stop at B. We may not be able to get to the final destination. They're not meant to go from straight A to Z. That's not life, right? And that's not finances. So when you're doing financial growth planning, whether it's through digital asset, physical assets, whatever it may be, you have to think of like what is my goal and what is my risk that I'm willing to put in? What's the skin in the game that I'm willing to lose if this doesn't work? And if you're not willing to do that, you should just work a 9 to 5 and continue to save money as best as you can until you get to a point where you have some that you can risk. Because if you're not willing to risk it, there's nothing you're going to do where you don't feel like you're taking a loss, taken advantage of, or misguided. Because in this space, you're going to lose money. In this space, you're going to make money. The question isn't if you're going to lose money or make money. The question is, who do I follow? What do I know that I don't know? And when I know that I don't know it, now, how do I get to know what I don't know? All right. Because without taking those 3 steps, you're never going to get to the next evolution phase. You're just stuck in what I like to call the goo, right? I'm hearing about all this stuff, right? And I'm learning about, let's say, I'm just going to use my phone and pull up like Robinhood, right? And I'm going to pull up a random stock here. So let's just say I'm learning about Archer is the first one to pull up, which is an aviation company. For those who know me, you're just going to chuckle at that. But anyway, all right, I'm looking at Archer. And as I'm looking at their stuff, again, I'm not advising you to buy Archer, but I'm looking at their stuff and it's down. Okay. And it's down by 10 cents, 1.8% right now. You know what I'm saying? But in the last year, they're down 37.31%, which is $3.25 per share. All right. So they went from essentially $10 almost a share, a little over that, to now they're at 546. Okay. But what's my risk? I want to be in the next boom, the next tech space. I know aviational flights for drones are coming, right? You know, that's just the reality of 2026 forward. What am I willing to risk to get into that? I know that anything that's new is going to require some setback and some move forward, and sometimes more backwards before I can laterally move to go forward. It's the same as investments, right? I've got to go through a period, especially if I don't have money or didn't come from money. I've got to go through a period where I break my back. I'm working a 9 to 5. I'm pulling extra shifts, but I'm pulling those extra shifts with the mindset that I'm willing to put in the fatigue and the hours, right? So that I can get out of the vehicle that I'm currently driving to get to a vehicle with a little more space and a little more opportunity. Does that make sense? Right? A little more space, a little more opportunity. I don't need to go from the bicycle, if you will, straight to a Maserati. All right. I don't need a takeoff win. Usually when I have that, it's not going to work. I'm just going to be honest. Right. Because life is built by processes. It's processes, right? You got to go through these processes in order to be able to get to the point where you go, this is when I should do this. This is when I should do that. That becomes an educated investor, right? So unless you have somebody who can walk you through processes, right, you might want to pay a little attention there, right? Now, if you got enough money and you can risk it, then you'll hire somebody who's going to be, you know, able to do that for you. But even then, we're in the AI world. That one person, they could be the best trader in the world, the best stock advisor in the world. but they'll never beat the AI bot if it's programmed good enough. So now we got to find AI that can support them, right? I've got AI, I've got a human, and then I've got a little bit that I do on my own. This is what I do. Okay. So I've got a trifecta, right? And hopefully the losses that happen here are made over here and over here. And then when this one takes a hit, these two can make the gap, fill it, and I'm still making money, but not losing too much, right? Technically, losing money is losing money. But in the world of investments, that you're going to do that. Nothing's going to just do this the whole time. It's going to have waves, and those waves are your vehicle opportunity, entry and exits. Okay, so what am I willing to pay to get into that? It's something that you really got to understand. And a lot of times, people don't. They see the success and where a person is, but they don't look at like where the person came from and their background. Right. For those who know me dearly, I had a great mom. She did and gave me all she could. But she was a very proud mom. She refused to go on federal services and social services and programs that would help us. So there's a points and times, you know what I mean, where I used to have to beg to eat. I would beg people for quarters. I'd say, "Hey man, you got a quarter? You got a quarter? You got a quarter?" And my hustle was I would get the quarters and I stash them and hold on to them. And if I had $1.75, I could get a bag of French fries. I don't know what it is now. $1.75, I get a bag of French fries. And then the lunch ladies started catching on to my little hustle. So when they had overages, uh, wink, wink, because she no longer works there. But even in high school, she would see me trying to get by, and she would help make extra food because they always have a little extra, right? Just in case they have an influx. So she would help me make extra. She would help get extra food, and she would make sure that I always had a meal. You don't get people who do that anymore, very rarely. But little did she know, she made such a huge impact on my life, right? Because it took the strain off of being able to eat. Now, when I got home and we still were short money, I had to work a 9 to 5. So I only worked at restaurants that served food because we would have to, take food sometimes to make sure we could still eat at home. And then we would ration it out to get through the week. So when I say what's your risk, what's your skin in the game? What are you willing to sacrifice? What's your hardship that you're willing to go through? You got to go through that. So my hardship for me was going to the military and learning how to be financially secure and starting over from scratch. And then I was lucky enough to meet good people along the way. So what I try to do and focus in is just try to be another good person to someone else who may need an opportunity. So when I say I've been on both sides of the fence, I've been literally on both sides of the fence and in the middle. Okay. Because this doesn't happen overnight. So I want you guys to understand that there's a risk that you have to take. There is a cost that you will have to pay. And it doesn't matter who you are, rich to poor, to get to where you're trying to get to. Because without risk, there is no reward. And without putting skin in the game or spending money, you cannot make money. It's just the bottom line. It's just the reality of life. So, what I look at when I do things, ladies and gentlemen, and getting to our financial portion now, right? Because now that we understand our mindset, we understand that life is going to present us opportunities. And sometimes we just got to let some shit go. Sorry, you just got to let it go. You're like, man, I really like going out to eat. I'm willing to not go out to eat for the next 2 or 3 months for this next quarter because I realized when I added up my spending each week, I was spending $170, $200 a week. All right, well, if I took $200, multiply that by four, obviously we're at 800 bucks. I take that and I roll it by three. Man, that's over $1,000, right? That I could have applied to a trade or to a platform that can yield me money. Now, granted, I got to risk it because I don't know, right? I don't know if this is going to work. If you knew it was going to work, everybody would do it. And there would be no opportunity because it wouldn't exist. See, that's what we don't think about. We're humans of cause and effect. We've been burnt. I've been burnt. I lost all kinds of money trying to get to where I'm at now, right? I've had really crappy deals and I've had really great deals. I met some really good people and I met some really horrible people, right? So what I say here and what I'm saying this is Because of what happened yesterday, it cannot dictate today. Excuse me, Dick. We don't want to say that. Cannot dictate today's result. Okay. Quit letting the luggage of yesterday carry so much baggage and build up that when I go to get into this new vehicle that life provides me an opportunity to take, I don't have, I don't have a way to get into the car. I got 13 bags. This ain't a minivan that you're getting in. You went from the bicycle opportunity and now you're on the motorcycle opportunity. A little bit faster, but because it's a little bit faster, you don't got to do the manual work. You can put a bag on your back. So carry some of your luggage, but don't carry all of it. I'm not saying just forget it. But what I am saying is there's some shit you're gonna have to leave behind. And I'm gonna be blunt on these videos for y'all because I just say it out of love. Whether you use it or you don't, it's on you. Because it's gonna apply to somebody, and that's why I'm making the video. Okay. So the reality is you gotta let some of this stuff go. I talk with people and I hear people like, oh well, this didn't work or I had a bad experience. And I'm like, yeah, the kid who goes and plays a football game doesn't have a whole season of good experiences. There's going to be one game where he felt the ref just was missing every freaking call. That didn't stop him from getting on the field the next game, right? It didn't stop him from going out and trying to make the play. So why would you let yesterday's effect stop you from taking another opportunity? Because let me tell you what, life is like batting, right? For those of you who play baseball or whatever, right? You get up there, you keep swinging and swinging, you'll eventually time that ball right and you'll line it up right and you'll make a connect. All right. That don't mean he might not hit a pop fly and be out, but you'll connect to that ball at least once. Right. That's where this comes into play. All right. The goal is not to be out. The goal is to say, I'm going to go back to that batter's box as many times as I need to get where I got to get to. Because if I quit, what was the point of me even going to the batter box to begin with? I could have just kept putting my money in Chase or Wells Fargo, Bank of America, whatever it is that you have. You just keep putting your money into your bank account and let them pay you 0.03 or whatever percent that they're going to pay you at the end of the year. If you got enough money in there, they may pay you a percent or a couple percent. And just keep taking your safe returns that way. But this is my question. When you do that, they have something called unsecured and secure loans. We'll talk about all this stuff later. But when you do that, they're making money on your dollar 10 times over, and you're not getting the value of your dollar. You're getting 3 cents on a good account, 3 to 5 cents per dollar. And then you got to claim it at the end of the year and get taxed on it because it's earnings. So if I'm going to do that, ladies and gentlemen, I'm not saying don't put money in the bank, keep it in the bank. But if I'm going to do that, I also want to put my money where I'm going to make money. And then if I have to pay taxes, at least when I pay taxes, I still have some money left over. At least if I pay taxes, this tax money that I'm going to have to pay on my earnings will be real money that can solve a problem, financial problem or deficit in my life. Now, you're only going to get to that after you put enough money in, right? So, what we want to go ahead and do is get to the point where we are able to do that and do it passively, securely, so that it keeps generating revenue back. That's what GIG is about, right? We show you how to leverage some different things and different points that we're using. It's a private community. You have to pay to get in, but once you're in, there's no continuation of payments or whatnot. You can literally come in and we're going to show you portfolios of what we're doing, right? Those who are in that position of expertise, right, and experience are going to show you things that they're doing. You're going to be able to see the results and actively get returns on them. And you can utilize this to get where you got to get to. Now, I'm not saying this is going to fix your problem all in one night because if I put in $10 and someone else puts in $100 into the same investment and both of them get a 10x return, the numbers are significantly different because they have 10 times the amount of money in on the risk, right? They should make more money, right? It's not that they made more money. They got the same X that you got, 1X, 5X, 10X, right? The only difference is one person's risk, right, level and risk propensity was higher. The others was lower. We all got to start somewhere. So it doesn't matter where you start, just start. And then take that money, let it sit, keep growing, or put it in something else. And eventually, what's going to happen is your risk propensity is going to get big enough to where you can put more in. And once you put more in, you can start getting those bigger returns. But you let interest catch up with you. It's called compound interest, ladies and gentlemen. Biggest thing to know. Compound interest and passive revenue. If you can put them two together, it doesn't matter what you got. It can take 3% every month. But if you did over 3% every month, you're going to be doing, even at 3% every month, 1% every month. Let's go ahead and keep it really low. If you were to get 1% every month, that's 12% a year you're going to make on whatever you have in that investment. That's very hard to get in a Charles and Schwab account. I know because I got a Charles and Schwab account. All right. 12% is a good number. You know what I'm saying? Unless you got some serious money in there, it's going to be hard to beat 12%. It's going to be hard to beat that consistently, right, each year if you're doing stocks. 12 to 17%, you're doing pretty good. So if you're looking at it that way and you can do 2%, 12 to 17% is good. If you can do 2%, you're doing 24% a year. Where do they do that at? Passively, by the way, and with minimum risk. All right. I'm not saying that's going to be because I can't tell you that you're going to get that with us. What I can tell you is statistically, based on our records, right? And we deliver our records to our clients, they're doing more than that, a lot more than that. All right. So, but they understand and we preach piece by piece by piece, by piece by piece. We don't got to eat the whole cake at once. We'll take nibbles because we understand smooth, steady, fast wins, right? Tortoise in the hare race. You know what I mean? We just keep moving. While everybody is running and sprinting, they get tired, they take a break, we still moving, right? When they're going like this and then it crashes down, we're still doing this, right? We're following the wave too, but we do puts and holds. So as it goes down, you make money. When it goes up, you make money. So we're okay with the market swinging. We want swings. That creates bigger returns. All right. So what I'm trying to say to get back to the topic of this video, which is just be willing to put some risk in the game. Be willing to understand that like I'm gonna have to do something different and I'm gonna have to get uncomfortable. And depending on where I'm at in life, I'm gonna have to get really comfortable being uncomfortable. It may take me because I don't have a lot of money to risk. It may take me a whole year of laying on the blade, right? Just sliding down the sword, getting stuck in it. It may take a whole year of really uncomfortable living, right? Which is your price of entry. So we're going to title this The Price of Entry. It's your price of entry. Doesn't matter where you are in life. Rich person or poor person, doesn't matter. Everybody's got a price of entry. Some people can pay it a little more leisurely, if you will, right? Others are going to have to give a little more. Price of entry is the price of entry. It doesn't matter. It's based off of where you are in life at that particular moment. It's not going to say that it's going to stay like that. That price of entry is the price of entry. And if you are willing to pay it, 9 times out of 10, you'll see success. You just have to ride the wave. You got to stay in it to win it. All right. You can't get in and then something happens. You go, okay, well, I paid my price of entry. This didn't work. I'm out. You might have to get up there. Like professional baseball players who make millions of dollars strike out. They still get back up there when it's their turn and they go right back at it again. And then they go and practice and then they go back in there and go at it again. Right? Perfect practice makes perfect results, but nobody's perfect. So you're going to fail. I want to make that very clear. You're going to fail. Our vision and our goal in GIG is we stay so small, so risky, or so less in risk that it's not risky. Right? And that's our goal, a little bit by little bit by little bit. So think about your price of entries, ladies and gentlemen. Decide on what that is that you want to do and decide that that's what you want to do. And if that's what you want to do and you're willing to pay that price, then go and get your success. All right, that's the end of this video. And I want to thank again all of you for watching it, joining it, share, repeat. Again, it doesn't matter where you are financially. The price of entry is the price of entry. Facts are the facts. It doesn't matter, Jack. right? And every rich person or poor person is going to have to go through this. So you just have to decide, what are you willing to risk? How many times are you willing to fail to get to success? How many times are you willing to sacrifice whatever it costs to sacrifice it so that you can get into that next vehicle to get more opportunities so that you can take your risk propensity from this to this? And once you can get to this, the same risk, same investment that someone else is doing here, same return gets you this, not this. But you got to get in, because if you're not in, you're not getting it, and you're not, paying the price of entry, then you're just going to be sitting and watching on the sidelines. Now I'm gonna go ahead and end it with this last piece. The world is restructuring. Physical dollars ain't cutting it. Digital currency is taking over. You've been on digital for the longest, whether you like it or not, you want to admit it or not. And if you don't believe me, I'm going to challenge you to go to the bank, liquidate all of your assets, liquidate all of your physical money in your account, and tell them to give it to you right now. Now, depending on where you are financially, you may be able to do that. But across the board, if you own a house, for example, and you're just getting by, they're not going to liquidate your house value in one day. They're not going to liquidate your account with $100,000 and let you walk out the bank in the same day, right? Unless you have a copious amount of money in there, right? So if you're like, all I got is $100,000 between all my accounts, they're all with the same bank, and I go in the bank and I say, I want my 100,000 right here, right now, right? Or let's just say 90,000 of it. You can keep 10, but I want my 90. I want 90% of it right now. They're gonna look at you and say, you got to come back, make an appointment. Then the money truck's going to have to come and bring you your money. Then you're going to have to sign a special form that you're getting this much money from the bank. And then you're going to have to sign another form of waiver release, because when you leave the bank, they don't want to be responsible if you get mugged in the parking lot, right? Literally. All right. Literally. I've done this. So I'm just letting y'all know. Literally, this is how it works. All right. And then you get your money, but it may take you 5 days, 7 days, 10 days. It depends on when the money truck's available and how much you're trying to get. So, look, guys, where does the money go? If it ain't in the bank, where's it at? If they got to order it to get sent, who holds the fiduciary responsibility to have all that cash in their hand? I got a little money gun that I'm going to shoot up here in a moment, but let me get my little fake money out. Yeah, I say it, fake money. All right, who's the person that's holding all those hundreds and thousands and fives and tens? Who's holding all that money to make sure that when you come for your money, you can have it? Some will say the Federal Reserve. Some will say da 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 da. But the reality is, it's digitized, because if everybody could liquidate their account at the same time, it would crash the entire system. So where does the money sit? Off ledger. They have something called on ledger, off ledger funds. Off ledger funds are funds that are making money. They're lending it to you, right, as an unsecured loan, which is someone else's money. They're making interest payments, is why you got to pay interest. But if you were to default, right, they're going to have an unsecured loan. They write it off at the end of the year. It's covered through their insurance. They get their money back. It puts your money back into the account so that you don't lose the money. And at the end of the day, the bank continues to go off and make more money. That's why they have a risk ratio and credit scores to kind of help mitigate how much loss they take. So if that's the case, all right, I'm just speaking facts here. If that's the case, ladies and gentlemen, like, you got to do something different. You got to do something different. All right. I don't care if you do it with GIG, if you go do it with Charles and Schwab or JP Morgan or whoever, like, you got to do something different. Because if you're sitting back and you're like, man, this shit makes sense. If you're sitting back and you're like, yeah, I need something, you got to do something, or you're just going to be stuck in the same spot. And you can't do what you did yesterday thinking tomorrow's going to be better. That thing ain't going to happen. If that was the case, nobody would go to work, right? If I'm working a 9 to 5 and I think that yesterday's work is going to pay me for tomorrow's day, you're going to be missing some bills, right? Same thing, ladies and gentlemen. You got to have that price of entry. no matter what you do. So think about where you are, think about what you're doing, think about the little bit of money you may be able to put together. All right. Whether you do it with me, whether you do it on Robinhood by buying stocks, whether you, whatever it is, you know what I'm saying? Do something. Just do something. All right. Now here's my pitch. All right, for us, and then we out. All right, GIG again is a private investment group. All right, we're recognized through the state of Ohio's private investment group, and our private investment group focuses on helping people get access to known results or known platforms that are giving results. That's it. All right. So our goal in everything that we do is provide the same level of opportunity, right? If I'm doing something to make it 10x and you do it to make 10x, the only difference between your 10x and my 10x is I might have 10,000, you might have 1,000. I might have 1,000, you might have 100. You may have 10,000, I may have 100 in it. It doesn't matter. The only difference is the amount of risk capital that I'm able to take when I get that opportunity to get that X. So you're not taking money from me. I'm helping you find money in the market that I'm getting money from. And that's it. So if you're interested, visit the lowerbillco.com or the link on our page, a link in this video, a link on the YouTube page, and it'll take you to the GIG platform. You can speak with a member, representative at GIG by email. They'll send you an intake form. That intake form is just to gauge where all of our people are in our business. It gives us a percentage to let us know how many people are new, how many people are moderate, high risk, low risk, right? So that when we build products and opportunities, we can bring the right opportunities to this group so that people can participate in them, all right, and utilize them. But at our base core, every member becomes part of our crowdfunding group. And that crowdfunding group has one major pot. It distributes every 90 days into your digital wallet. And then those digital funds are your earnings, right? We take a percentage and then the rest stays in the active. And then you continue the compound interest from day one. We activate you with compounding interest, all right, passively. You don't have to do anything, right? Other than read your financial report every 30 days and read your quarterly statement. That's it. We've got more, but that's the most general and basic entry point. People are going to ask, well, what's the price? It's $1,000 a month, or excuse me, $1,000, right? No monthly fees. All right. It's $1,000 when you start up. A portion of that thousand goes right into your investment. So literally, it's $8,000 to get set up. What we charge monthly, all right, is off of your earnings. So if you make money, we make money, right? So it's an 80-20 split. That's it. That's simple. All right, guys. I hope that helps you. I hope this helps kind of give you some options. If GIG sounds like something you're interested in, check us out. If not, no hard feelings. Keep watching the free videos. The information is the same for anybody. It doesn't matter where you are financially, this information is the same because everybody, as I said before, price of entry, risk value. It doesn't matter what you do, whether it's $1 or $1 million, you still have to take a risk, right? Because you got to put money in. Everybody's got to do this. The X's are the X's. The only difference that makes your difference of your outcome is how much you can put in, right, before that X happens or when that X comes, which will determine what your returns will be, your ROI, return on investment. All right. Peace, love, and happiness. Until the following Monday, I'll catch up with you guys on the flip. Peace.